Hi, Rex Moore with the Motley Fool here, and I've got 5 free stock picks for you today. And there
guys ready? Morning, friends. Welcome to Forex.Today, the YouTube channel of 18,000 foreign exchange traders stationed around the world. It's where we get together as a community to align our satellites, synchronize our watches, and get our trade plans on. So without further ado, let's get on with it. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. By the way, my machine is making noises behind me. Hang on. Hang on. Shut up! Who's the boss, huh? Who's the boss? I don't know. All of a sudden it sounded like I had 10 fans behind me. Stupid machine. Anyways, guten Morgen. So, hey, we're here to do some technical analysis, some fundamental analysis, some trader psychology. The raison d'etre of these live streams is to teach you how to put together trade plans so that you actually trade thoughtfully. Sound is very low. Sound is very low. Sound is very low. Sound is very low. Okay, how about that? G'day, mate. How are ya? How's your mum? Yep. Cool. So anyways, we're here to learn how to put together trade plans. Okay? And this is going to bring consistency and control to your trading. And once you've developed control, think about it, now you plan your trades in advance. Therefore, you get consistency because you always plan your trades in advance, and these trades are going to be very similar. You only buy at support, you only sell at resistance, right? So once you have control, you develop this consistency, and then you can take a look at your results, make some tweaks, look at your results, make some tweaks, look at your results, and then over time you'll do very similar trades over and over and over again, and you start to develop confidence because you know from studying your statistics, statistical analysis of your performance, suddenly you'll have control because you're like, hey man, all my trades kind of look the same, and 72% of the time I make money, so I feel pretty confident with that. Yeah, I got a lot of break-even trades, but look, I got a good, clear shot at the net, so I took a shot, right? Managed the risk, not a big deal. And all of a sudden, now your confidence is based on reality, not I'm good enough, I'm smart enough, and gosh darn it, people like me. Positive affirmations, not the secret sauce to becoming a successful Forex trader, right? Reality check is a pretty good start. So anyways, ask questions, get involved, take notes, write things down. Make sure you always ask yourself, what was my key takeaway today? Because if you don't remember, for example, what did we do 3 Fridays ago, 4 Fridays ago, 5 Fridays ago? You're like, dude, I have no idea what we talked about 5 Fridays ago. Was that non-farm payrolls? Right? Like you don't even know. And and studies have showed that humans have, forget about 95% of their life experience, so they don't even remember it, right? Like, what did you eat for lunch 5 days ago? You're like, So you must make a conscious effort to write things down. And out of a 2-hour live stream, there might be 22 seconds that actually has a decent impact for you personally. You should document that, because the more gems you remember. Okay, if you've documented 1,000 gems, now you own 1,000 gems, and those are yours, the sum of your life experiences. So write things down, please. Okay, so thank you for being a positive contributor to this community. I got some ideas how to have an even larger impact as long as you're interacting as long as you're part of this community, more than just a viewer or lurker. If you want to be more active, I think I got some ideas on how to have a positive impact and influence on your success journey. So cool. More information coming up about that. And also, I'd like to thank Traders Way for being part of our community as well. When you are ready to trade real money, maybe because of these webinars and these live streams, you start to develop confidence in your skills. And you're like, hey, man, I'm ready to trade real money. You're going to need a broker that you trust. And Traders Way has earned my trust, so perhaps they might just earn yours as well. So give them an opportunity. Visit tradersway.com. Fill out the little form on the bottom right-hand corner. It says open up a demo account. So open up a demo account and practice, right? Practice. That's it. Practice. And over a period of time, you say, wow, I really like Traders Way. Now you have an execution partner for your brand new Forex trading business. Namaste, Sean. All right. So let's get going. What we have here is failure to communicate. No, that's a good song though. Hang on, let me move this out of the way. Hang on now. Okay, so what has the morning been like? Let's take a look. First of all, I woke up an hour early. Second thing, I meditated. Third, made breakfast for my children. Now we're here. Great. So what happened overnight? We're looking for a rotation out of yen weakness into dollar weakness, and we seem to be having that. Now, yen is actually not just less weak than the dollar, but actually stronger than some of these currencies. Stronger than the pound, so you might be shorting pound yen. Yen is stronger than the Kiwi. You might be shorting Kiwi yen. Yen is stronger than the Swiss franc. Probably not trading that. Aussie yen might be coming down. Euro yen sort of neutral, okay? And CAD's weak right now, which is interesting because I think I got knocked out at break even on a USD CAD trade yesterday, and sure enough, it's all the way back to right where it was, and versus dollar, and yet dollar's weak, and so is CAD, but CAD is stronger than the weak dollar, even, right? So US dollar is even weaker than the weak Canadian dollar, which is kind of interesting, right? Okay. Or maybe this is because it's on daily. Let's move this. Oh, yeah, look, I've lost congruency all over the place. Let's make this an hour, okay? And then let's make this an hour, hour. So this is sort of like set up for day trading, right? So CAD is weak, dollar is weak, but weaker is probably, US dollar is probably weaker than USD CAD, and of course you can tell that by looking at your charts. Starting over here, well, let's do some currencies, or sorry, commodities. Sorry. I've only had 2 energy drinks, and this is my first coffee, so not quite up yet. Why is CAD weak? Well, we'll look at this. We'll look at this in a bit, okay? Hang on now. Okay, let's start with Goldilocks. Okay. Are we bullish or bearish? Oh, look. Oh, right. Quite right. Okay, once again, we have to go back through this. I want to make sure that you're following on our journey and having the same experience as everybody else. Remember, if you don't remember it, it never happened, and I'm trying to have you remember, okay? While this was falling, oh, look at that. My drawing tool's not working. Hang on. Close drawing tool, open drawing tool. Let's see if she works now. I don't think it's going to work. Oh, no, I'm going to have to reboot. I can't reboot. Seriously? I don't have a drawing tool today. You're kidding me. I can't draw. No. It just won't work, yo. Say yeah, hey yeah, oh no. Yeah, it's funny because it doesn't even close out. Hang on, I'm gonna do a force quit. Hang on, don't go anywhere. So white as snow, I say hey, oh hey, my love. All right, where is it? You guys see it? Where's the? What's it called? Epic, right? Yeah, I got too many things open. I know. Epic. Oh! 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 Keeps moving. I saw it. Did you see it? Must be one of these. What? I got Excel. Okay. Try that. By the way, in my swing trading group yesterday, I showed members a 7-screen laptop. Oh, good. Look, it worked. All right. If you need 7 screens, I only have 3, and I feel bad about it. All right. Okay, let's go back through the experience. On the way down, it fell for months and months and months. From January 1st to basically March 1st, it fell. And we were okay with that because we kind of expected the dollar to be generally strong during that period. And we said, okay, on the long term, however, meaning not over the course of 90 days, but maybe over the course of 9 months, I think gold has a good probability of going up. But we have to wait for market conditions to improve, to demonstrate to us that is no longer bearish in this move, but has become bullish. And we figured somewhere between March 1 and April 1, this would occur. Okay? More specifically, maybe February 15th to March 15th, whatever. Okay? But certainly in this period, okay, between March and April, but certainly by April. April is a key point, new quarter, for example. So anyways, on the first week of March, we hit a bottom. And if I recall correctly, that was a key pivot point, so it was logical. Okay, and then we had a big upward movement. And at that time, I said, look, that could be it, but it's a bit early. I'm not convinced yet. It's too early. I like it. It's too early. Besides, a one-touch is not a reversal pattern. A one-touch is not a reversal pattern. The very basic of reversal patterns is a double bottom, and we're going to kind of need that. So even though this is up quite a bit, $100 or something, it's too early and it's not enough. And, right? Sure enough, she comes all the way back. Now we hit April 1st. And we're like, okay, well, the timing is better. It's about right time-wise. And we have the right price. But we still don't know if it's going to go up. So if you're aggressive and you want to enter this bullish trade, you could, but somewhere down on this right side of the double bottom, you're going to have to be in a much smaller time frame, and you're going to have to look for, patterns on that, right? 2155 crosses on a 15, 5-8 cross on a 15, 1-2-3s on a 15, maybe even a 5-minute chart. Okay, we're going from a weekly chart down to a daily chart, down to a 4-hour chart, all the way down to a 5-minute chart. You're catching bottoms and let's say like my favorite of all time is a 1-2-3. So you're catching something down there, but your strategy is on a big time frame. Your execution is on right. Your tactics are on a very small time frame, like a 5-minute, because you're trading the right side of a double bottom, and you already know you want to be long. Because your fundamentals, your seasonality, your bias are all forward looking. They're forward guidance. So on the way down, you're like, okay, I see it falling, but I'm a buyer. And then you see it bounce at a price. You're like, okay, price is nice, but that I don't trade price. If you're a trend trader, you're really trading more of the market and then incorporating price. So you're like, okay, I got it. It's the right price, but I need market conditions to be much more bullish, not just hitting something, right? I don't want to bounce. I want a reversal. So now the second thing is maybe down in here, you're executing in a small time frames, right? Boom, 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 boom. But I'm like, that's still fairly aggressive because what you really want is the higher high. There's the higher high, which then sets up the higher low. Okay. And then, of course, what you're looking for in the higher low entry, let's make this a sort of a different green, and I'll make this a highlighter so you can see through it. The sweet spot is what we call it. Okay, there's our sweet spot. The 382 to the 618 Fibonacci retracement. Okay. So a 382 predicts a 1618, and here you are. There you are. Lovely to your mum. Okay. So here's the cool thing. The reason I'm trying to teach you about trade planning is as this was falling, I was coaching you to say, look, what's your bias at the end of the year? Is it going to be higher or lower? Many of you said higher. I'm like, okay, cool. It's not ready yet. It's not ready. Okay, because over here we hit support and went up for a while and then collapsed. Why? It's a bearish market. Why be a bull in a bearish market? It's never going to work out that well for you. You're going to have a lot of break-even trades or a lot of little winners, but who wants a little winner? Right? Oh, I'm too modest to have big gains. Okay. Okay, so anyway, so you wait and wait and wait. Now, technically, a double bottom is technically no longer certainly as bearish. It might not be bullish quite yet, but at least you have a reason for being, right? A raison d'etre. Like now you can show up and say, well, I'm a bull and April is when I want to be a buyer. And on the first day of April, sure enough, you got a double bottom. So you give it a try. Then you fold in like swing trading, and every swing trader on the planet knows that that's the trade plan for April. Oh, look, it worked. Okay, that's a swing trade. Okay, a position swing trade. This is the higher high. This sets up the 1, 2, 3. The Fibonacci retracement sets up the 382 to 618. Okay. And then if you look at this, if you recall, and if I recall right, this was actually Fibonacci, not a Fibonacci. This was a weekly pivot point back then. So anyway, so now you got like sort of dailies. Well, first of all, monthly. Actually, we have to go even farther back. This is what I told you guys yesterday. Fundamentals. When we look at fundies, we're looking at, let's say, 1 to 3 years. Okay? When we're looking at seasonality, okay, let's say we're looking at 1 to 3 months. Okay? Forward looking. Now, fundamentals do not reside on your chart. Seasonality does not reside on your chart. But this is why I can tell you in January, February, and March that April is probably going to be a time where we want to get seriously bullish if we're already a bull. And you should probably stand down. You might take little shots at key levels, but you shouldn't expect much. And you change your behavior, or at least you change your expectations, and that should change your behavior. And not because of something on your chart. You see, like you're like, okay. So when I saw this, I said, okay, I like the price action, but it's too early. So a newer trader might raise their hand and like, what the hell do you mean too early? It's a price, and it went up, and my CCI says long, and my MACD says long. I'm like, I understand what your chart says. But it's looking backwards, so you're already late. And by the way, I'm thinking about next month, and this is too early. What do you mean too? How do you know it's too early? because I'm an ex-supermodel, and supermodels are generally smart, I think. At least that's what we tell ourselves. So, so it's interesting, right? So now you got all of this put together, and then you say, okay, there's your technical 1, your technical 2, your technical 3. So you could be long at 1 and 3, and then these kinds of things have their targets, which are clustering around 1795 and 1809. Right? 1795 to 1809. Can we just say somewhere around 1800 you take your profit? It's actually higher than that. Look at that. It's 1797, okay, to 1808. Really? I mean, look, there, I don't know. It can't be, right? We've got this, and then we got this is what I'm looking at. Okay, so we're like, dude, just get out around 1800 and you're golden, right? 1, 2, 3, perfect April. Now, it's not that April was perfect. It was that we were talking about this type of trade plan in February and March, and actually got the conservative, disciplined, repeatable entry on the exact day that we were hoping. And now it's the 23rd of April, and we've hit the exact target. I love it. All right? So this is what I'm trying to teach you. Forethought. Because when you have forethought, you have value creation. Right? If you're responsive, so you're like, oh, well, gold has created a particular candle, and now I'm going to short gold for $22. There's no value creation. It's like selling somebody a potato, and now you don't have a potato, and now you have to go grow another potato, and you're like, okay, I got a new potato. It's the nicest potato in all of Kazakhstan, right? I don't know. And you sell your potato, and now you're out, and you're just constantly, right? You're constantly, what am I thinking in my head? Like, there's no compounding. Right? It's like the difference of being rich and being wealthy. Rich people make a lot of money, so you sell a lot of potatoes, okay? You're the supplier to all the potato sellers in all of Kazakhstan, right? And you're living off of income. Okay? But that's a form of poverty. In my definition of poverty, you trade your time for money. Okay? My definition of wealth is your money works for you. Okay? You sell a potato, now you got money so you can buy some bread. Okay, and then you grow another potato, right? Wealth is different because it's growing and accumulating and growing and accumulating, not based on your time or effort, but based on the value creation of your trade plan. Your careful analysis of macroeconomics, your careful analysis of fundamentals, your careful analysis of seasonality, your careful analysis of current market conditions, and then when the current market conditions are favorable, now you trade. And then ideally, you're not trying to make $22 on a $2,000 gold trade and you pick up $22. Instead, you're looking forward and you can say, well, I might be in this for 1 to 3 months, maybe the rest of the year, and you're holding those. So now it's growing beyond your daily trade. But you also might be adding to that position. And the cool thing about that is because Forex is mark to market, you are actually able to trade your profits without exiting the initial trade. See, like if you're in Apple stock, and it's profitable, so you bought it at $100, now it's worth $1,000, you don't have the $900 in your account to trade. You don't get the $900 profit until you sell your position, but now you're out of your position. Again, it's like, I have a potato, right? I spent 6 months growing this potato. Would you like to buy my potato? And then someone buys your potato, now you're out of potatoes, and you're like, okay, right? In Forex instead, right, because like the Apple stock would be like the potato. You bought a potato, then you sell it to somebody for $1,000, you pick up $900, but now what? Now you don't have any potatoes, you just have money. Okay. Instead, in Forex, it's mark to market. So what happens is you already have the profit in your account. You don't have to exit. Now you can trade the profit, right? I call it the bank's money. Now you can trade the bank's money, right? And therefore, we have this very, very competitive advantage. Why Forex? One of the reasons why Forex is the best thing on the planet to be trading, right? And instead of making, I don't know, $100 a day scalping, right? So here we are. Here's my positions. 1, 2, 3, 4, 5, 6, 7, I don't know, 7 or 8 open trades. Remember, I've already taken at least 500 pips off of this 2 days ago. Okay. Some of these trades are newer trades just from the last couple of days. But the thing is, last night I only had 850 pips. Now I have 1,150. I made hundreds of pips sleeping. Now, how the hell can you do that? I'm predicting the future. I'm not responding to the now, right? I'm not responding to the now. I'm predicting the future, and I'll say, okay, if I buy gold, I don't want to make $22. I want to make $222. Well, how do you do that? Like, well, I can't predict the future, but I can study the economic situation and try to extrapolate what the future is going to be like based on current monetary policy, current fiscal policy, global macroeconomics. So I've been showing you guys how to look at things like the API, right? API, American Petroleum Institute. We looked at that data. We looked at that energy distribution company that I could never, it's got that funny name, Ridley Madison. I could never remember that company. But we looked at them and like, oh, look, they're moving, energy around from production into storage, and we can track their results to see is there demand and supply and all that kind of stuff, and what does that mean for the United States economy, what does that mean for the dollar, but what does it sort of signify for the global economic conditions? We look at a lot of different right? Yesterday, or was it a couple of days ago, we were talking about the car industry and Tesla and stuff, but not just for investing into not just to invest into like Tesla stock or NIO stock or Kia stock, but instead we were talking about your portfolio construction and creating an avatar for your potential future customer so that you can create the type of, product that they're looking to buy. So we take all this kind of analysis and we try to put it together and say, if you are creating a portfolio that's based on gold bullishness, partially based on dollar weakness, but maybe you believe there's going to be a future demand for this commodity because as my Harvard professor told me in an argument, because we argued over gold one time, and I got a question wrong on an exam, and I challenged him. I'm like, I'm a professional trader, for crying out loud, And by the way, never say that to a professor. And we were arguing over, demand for gold in good and bad economies and such. And what he argued was when consumption goes up, it goes up for everything, including gold. So now, do you think there's going to be an increase in consumption globally over the next 1, 2, or 3 years? See, in the swing trading group yesterday, we were talking about why there would be follow-on money coming as the United States goes into full employment again. What about the rest of the world? And we're looking at 1, 2, and 3 years in advance where future demand, or in this case, future consumption, will come from. And how that relates to COVID and how that relates to economic systems, right? So anyways, so if consumption goes up over the next 1, 2, or 3 years in general, consumption for everything in general will go up, including gold. And if there's a future demand for gold, that should push up the price. So maybe this is your investment thesis, but if you start thinking and planning and looking forward and stuff, you can say, I might take little shots as a bull on little opportunities on the way down, but you're really savvy on waiting for market conditions to really get serious about being in this market. And then when the market conditions show up, you're quite serious about doing things like front running. Remember, this was a front run. And you're off to the races. And all of this, by the way, all of it even takes me 10 minutes just to set it up. All of that is called value creation. And you would never make $22 on a gold trade. How childish. You're a boss. Okay? Why? Because of all that value creation you did through your research. Okay? Entering the trades are fairly easy because you've already planned it out. Cool. Anyways, thought-provoking, I hope. Gold. Yeah, Bitcoin's dead, back down to 50. Okay. I'd pay attention to that psych level. It was important in the past. But oy vey, huh? Was that a great trade or what? The 618 to 65? Once again, planned probably a month in advance. Buy at 50, which was the 618. Get to 65, take your profit. Holy crimoly. And we planned that a month in advance. If not a month, certainly 2 or 3 weeks. So very cool. Then it hit 65 and it died. Sorry, old boy. Sorry, old chap. Sorry. Okay. Cool, man. Love it. It's over. Nice. XRP. Whew. A little bit volatile. Okay. So did it drop from 2 to 1? Did you buy it? Okay. I once bought it at 34 cents, I think. Yup. Yeah, but that was like 6 months ago. Anyways, down in here, I think. Well, I can't remember. But anyways, whew, look at that. I went from 28 cents to $2. I was wearing glasses that day. Thank you, Wang. All right. Cool. Let's do some exotics. I'm short the Mexican peso. Oh, yeah, boy. Yeah. Feels so good. Oh, feels so good. Feels so good, baby. Okay. Nice. That's the kind of rollover Daddy likes. Okay. Very cool. Very late game trade and all that kind of stuff. I missed like 3 or 4 really fantastic trades. I had the limit orders in just because it tends to roll at times I'm not at my chart. So anyways, lots of good ones. Never quite got in. I finally got in this one. It's really late in the game. It's let me change the chart. Well, maybe, no, I can leave it there. Hang on. What if I go out? You can see, especially at that time, I'm simply front-running May. So this trade I took a couple of days ago was really, which is funny, right? So let's say the 20th of April, I was entering a trade for May. And it seems strange, and particularly if I take profit in early May. And I'm like, I'm done. And you're like, what do you mean you're done? Let's say it's the 8th of May. You're like, the 8th of May? How could you be done already? How could you be done for the whole month of May? It's only the 8th. And I'm like, what? You want me to like punch a time clock? I don't get paid by the hour. Right? Like, think about it that way. You're like, what? It's not a time-based trade. Like, I don't get paid per minute, per hour, per day. Like, what are you talking about? I sold it on the 22nd or 20th of April, but it's based on my May analysis. I got the entry. It falls. I hit my target. I'm done. I don't think it's going to fall further. And if it does, it won't be much and it'll be risky. So I'm not really interested in that. So like, get off my back, bro. So I got a 20-day vacation paid for. Right? Like, think of it that way. Like, well, okay, I did my job and I did it well. I made money and now I get to have a 3-week vacation for free. And I'll come back, maybe get ready to front run June. Now, that is difficult, if not impossible, if you don't have a fundamental bias or a sense of seasonality. You will not be able to predict the future. Because you can't get that kind of data from technical analysis alone. Okay? Technical analysis is great. But, right? Cool. So anyways, not a very good trade yet. I have hopes for it. I have aspirations for it. Not a good trade yet. Can't lose any money, so it's a good start. How about that? Ken says, should I cut a loss on Aussie yen? Well, right now we're not incredibly bullish on Aussie, although there's hope for it. But we're also bullish, or we're not bearish on yen anymore, Ken. Since April 1st, we're expecting more yen strength than the past. So I'm supposing you're going the wrong way for the wrong reasons. Are you going to go my way? Right? It's the wrong way. It's a wrong way. Right? Yeah, you might be doing last month's trade plan this month, which is obviously not going to work out very well. We'll get to that in a bit, okay? But here's something that I've been really preaching to you guys as well as to the swing trading group. All right? It's this analysis where back in March, even though this has been up, and up, we knew, and I prepared you. I did probably a 45-minute overview of it on one of my live streams here on YouTube. Plus, we've covered it multiple times in the swing trading group. This is a portfolio rotation. Oh, yeah, didn't I actually post a video called Portfolio Construction Analysis or something like that? Let me pull that up for you. YouTube.com/Forex.Today. Oh man, we'll never find it now. I really dislike how YouTube does this sometimes. Portfolio. Let's do that. Yeah, Wednesday the 14th of April was a follow-up. Okay? Was a follow-up. What a pretty boy. Pretty boy, pretty boy. Oh boy. Okay. Okay. So this was a follow-up, but like detailed, clear analysis of, no longer yen portfolio based construction. Okay. And instead, this massive rotation. So we talked about it in March. Then we talked about it in early April, because you can see I planned it from this week. And you're like, you see how squished it is? Because we were doing it here. I said, get ready, and probably off the M3. And of course, if you're a swing trader, because you might be saying like, how the hell did you know that? There's no way you could predict that. And I'm like, well, yes, it's difficult, but it is predictable. And one of the things is seasonality tells me this. But the other thing is, if you were a bear, this is the exact price like to get in. Like if you know how to swing trade, you're like, that's practically the only price to sell in the entire month of April. And you expect it to be a bear anyways. And check this out. This is the exact area bulls would get out. This is the exact price bears would get in. And it tends to happen a lot this time of year. So we were already prepared, already ready, willing, and able. Like, what do you mean you can't predict the future? Maybe you just don't know. There's a difference, right? So, right? So, watch that video again, and you'll see that I'm not actually calling for yen strength. I'm actually calling for less yen weakness and more dollar weakness. Okay? Oh, yeah, Daniel. Yeah. This is right. Yeah, anyways. But Daniel, if this isn't good enough for you, then I apologize, Daniel. I'm really sorry. I'm right. 1,200 pips, but you don't think it's enough. Okay. I apologize to you and your family and your friends. All right, so I guess we go back to exotics now. That was just answering the question about Aussie yen. We can get back to Aussie yen, but let me just continue where we are. So yes, I took 500 pips off this earlier this week during this up period. Doesn't look like a lot, but that's this entire week. Right? It doesn't look like much. Okay? But it's, actually from the 14th to now, right? So somewhere in here, I took off 500 pips off this trade, and this one is still up 700 pips. And then on the rotation here, okay, I re-entered. Okay, so I got a new one, so I'm adding that. Yeah, Daniel said good enough. Right on, bro. Right, cool. Yep. Yeah, cool. Yeah, Daniel, some people, when they say things like that, they're more here to heckle than to contribute or to learn, right? So usually when I say stuff like that, people just go away. The fact you didn't go away means, cool, right on. You're here to stay, you're here to contribute, or you're here to spam, right? You're here to spam. And then probably every 6 months, there's someone that shows up and they just want to cry in front of people. And it's really strange. It's a human behavior that I find very bewildering to me. I come from a part of the world where, you don't complain and you don't cry, right? You can walk into a hospital with a gunshot wound and apologize to the doctor for wasting the time. Oh, I'm so sorry. I'm so sorry. Thank you very much. I'm sorry. I'm sorry. And they're like, dude, you have a shotgun wound. Yeah, I know, but you're busy and you're here to see really sick people. And I'm so sorry. Oh, you don't have to go to this effort. This is the culture I come from. You're like, dude, you have a shotgun wound. Yes, I'm so sorry, doctor and nurse. I'm so sorry. And then every once in a while, someone comes into the YouTube channel and they're like, I blew up my trading account and I lost so much money. How can you help? Please help me. What can I do? Right? And they want to talk about that. Oh, right? And it's so funny. I'm like, dude, what kind of human being are you? Right? It's really funny. Oh, please help me. I lost so much money. Go take an options trading course or maybe flip some real estate with Grant Cardone. That'll do it for you. So anyways, cool. And then going back in time here, we were on some of these trades, and then going even further back in time, we were on some of these trades. So if you guys recall, I shorted, I think, this and sat on it for, I think, 11 months because I got knocked out on this. I was showing you how to carry trade. I think this one I was in for like 11 months. It wasn't quite a year, and I made 1,000% return on investment. And I didn't even make a pip. Yeah, Johnny's like, in my family, if you don't offer a solution, I don't want to hear it. You know, and people are different too, and people have different needs. So if my wife says, "Oh, this, and this is really bothering me. I'm very upset about this," I'm like, "Well, this is how you would fix this, or this is how you'd address that." And she's like, "Look, I don't want you to fix it. I want you to have empathy. I want you to understand why I'm upset." And I'm like, I don't know what to say, because I'm like, okay, I don't know what to do. Right? So I only have a solution. I don't have any empathy. So anyways, all right, let's move on.com. So exotics are doing just what we thought, and now we're rebuilding. That's all good. All good hood. Do some dollar. Cool. Once again, I think let's go back through history. This one's been frustrating for me, but it happens. You know, I don't really get frustrated, but it's sort of like, I don't know, could have been better. How far back is this? Oh, these are dailies. That's too far back. Let's do 4 hour maybe. Yeah. I got knocked out here and I was long. I didn't lose any money, but I still don't know how I moved my stop. And I think what happened was on Thursday of last week, I was coaching and I was already long, and somehow I did something with the stop while I was coaching, but not truly thinking. And I think I moved it and then got knocked out, which is, poo-poo. And then we're way up here, hundreds of pips later without me. I bought it here and broke even. And I think I skipped this one. I can't remember. But as you can see it, I am not in it. Okay. Bummer. I am a bull. Okay. I am a bull. This is a front run. This is a monthly support. This is a weekly support. This is definitely a trade if you're a bull. And again, nothing on this chart necessarily makes you a bull. I mean, you might say something like this. It's still not really what you're looking for, right? You don't look, typically you don't say, I want it to go up 250 pips and then come down 200 pips so I can buy it. But I understand this story. This is a swing trade. But I don't know. I did the peso instead, I guess. But I tried here, and I thought I would try it again somewhere else. Yeah. I don't remember. Okay. But still not in it. Okay. Next week's swing trade is pretty easy. You can see that if you're a bull. If you're a bear, you're going to cycle it around this way. Okay. Kiwi, I don't think I'm on this anymore. Typical monthly swing. That's a perfect entry. That's the target. We're not anywhere near there. That's why you can see monthly compression. But if you look at support this way, okay, this would be great. I'm not sure if we're going to get that. So you would have to dive in and say, can you see the weekly front run? And it's a little dangerous because you got, I don't know for you candlestick guys, what is that? Railroads or something. You're like, oh my God, the railroads. Whatever, dude. This would be the trade plan. And you'd have to ignore your railroads. Daniel C. says Grant Cardone is a fake guru making money mostly from his courses. Well, I don't know if that's necessarily true. If you look at his contracts, so he does oversee a portfolio of real estate in which he makes a huge management fee, and it's other people's money, and it's a lot. It's like over $1 billion, and it's other people's money, but he might be making, personally, or at least Cardone Capital, I think is making something like 1% management fee. And on $1 billion, it's a lot. and he earns a management fee even though he hires a management company to manage it, which is an expense. So he expenses, let's say 10%. I don't know, but let's say it's 10% to the management firms that manage, like, collect the rent and make sure the gardeners show up, right? So his contract has you pay for the management company, and then to manage the management company, he charges 1%. And then I think when he buys a new property, he charges 1% of the fee because he found the property. So he's like, well, I found it and I'm going to buy it with your money, but there's going to be a fee for that. So if he buys a $100 million property, puts $1 million in his pocket, plus he charges you 1% per year of the $100 million property. So $2 million the first year, $1 million the second, third, fourth, fifth, and sixth year, right? And then when he sells it, and let's say he sells it for $200 million, makes a $100 million profit, he gets like another 1% out plus something for being part of the fund. So if whoever said he's probably making more on courses, yeah, probably not. Probably not. Right. If you look at the structure of the deals that he's doing, he's making pretty decent money on his fees. Okay. Daniel says Cardone Capital lost a lot of people's money. Well, they invested. That's the risk they take. Okay. It's only criminal. Like, look, it's not illegal to lose people's money. It's illegal to lie to them. So if he's like, I'm going to go out and buy real estate, great. And I'm going to use leverage to do it, great. And then you get hit by COVID and people stop paying rent, blame the government for that. Okay. Now, what you'll find is companies that do this type of investing typically use lower levels of leverage in case you get hit by an exogenous shock where suddenly, let's say 10% of all your renters stop paying you rent and you can't afford. So let's say a normal recession, let's say you get down to 3% of people not paying you rent. So you're like, okay, I'm going to keep 4% reserves just in case we hit a recession, and I'm going to use leverage otherwise, right? And so if you get hit by 10%, it's unheard of, and a company like his could go bankrupt if it's over leveraged because now they're not collecting enough rent to even pay their debt. That's what leverage is, right? But even then, he could probably restructure some of that debt and all that kind of stuff. So I don't know. But look, if you invest into a company that uses high levels of leverage to acquire assets, so really what you're acquiring is 90% debt and 10% asset. If you invest into something like that, especially a firm that has higher than standard fees, then that's your damn fault, in my opinion. And if you're in Hong Kong, they're like, yeah, you should have made a better deal with Cardone Capital. And if they went bankrupt, whatever, he collected his fees, by the way. So you think of it that way. If he goes out and buys a $100 million property and he puts at least $1 million in his pocket for doing so, and then he used leverage to do it, and then that property goes bankrupt because the renters stop paying rent and you can't afford the debt, then the company goes bankrupt, you lose your money, but he already collected his fee. So if you don't like it, maybe you should start your own and find your own investors. So anyways, but I do like it. Like, so here's one of the things, like I studied at Harvard out of personal interest, how to structure real estate deals, how to structure levered buyout deals, how to structure, private equity deals, how to structure venture capital deals. Of course, I know how to structure things like managed accounts, hedge funds, right? So one of the things I did at Harvard Business School, in fact, was alternative investments, and I did another class in venture capital, and I did another class so I have all like how you legally structure these things and how you can change the terms of contracts and all that kind of stuff to either be advantageous to one party or the other. Of course, you don't want that. You want everything to be sort of like a good deal for everybody if you want to do future business. So it's kind of really interesting. Like, you should know these things. especially if you want to have your own professional trading firm or investment firm and you want to offer like your Forex trading or something else to a potential client, you should know the legal side of it, not just being regulated, for example, which is a whole thing of in itself, or learning how to legally market and sell your product or service, because there's a lot of compliance to that. But ultimately, could you sit down with your lawyer and say, okay, let's take the boiler template that you use for this type of investment vehicle, and I'd like to tweak it, make some changes so it's better for everybody. Are you able to do that and sit down? And of course, 99% of traders are like, I don't know anything about business. I don't know how to run a small business. I don't know anything about sales. I don't know anything about marketing. Never been regulated before, right? And ultimately, I don't know anything about the legal aspect of my, of my company, of the investment vehicle, or even where to domicile, right? And so I don't know any of that, but I'm a good trader. Well, you're not going to be a good venture or hedge fund manager, right? If you don't know all those other things too. So how about this? Just quick question. If let's say 2, 3, 4 years from now, I put together an entire conference and it was the business of being a professional Forex trader, like launching your fund, managing your fund, raising your fund, all that kind of stuff. Maybe I write a book and do a course and do a conference and maybe bring in service providers and all that kind of stuff. Would you pay money for something like that? Sort of like the MBA of a professional Forex trading firm. Everything except how to trade. Everything but the MACD. A Forex business conference. Can you imagine if I gave you a contract, a legal contract, and we go through and break down this? You could almost consider it like a term sheet. So I used to do this with entrepreneurs. I'd bring in one of my venture capitalist buddies, and we would sit down with a term sheet from their investment firm, and we would break down the entire contract, right? Paragraph by paragraph. What is a full ratchet? What's a clawback? What, full participation? Do I like that? Do I not like that? Is this a good deal or are they screwing me? What do you mean participation rights? What? Right? And you need to know all these things if you're going to do a deal with a venture capitalist. Right? So now, how would you structure the legal contract between you and your investors? Right? So Pete's like, maybe I'm in, sure, yeah, sure, why not? But see, it's not like a, right? It's like a Pam Plus. No, dude. No. But anyways, it's funny. Yeah, if Rick says if I haven't blown him in the come on, Ricky. You got to howl. Ow. All right, so very interesting. All right, let's take a look. I have 2 euro trades. One is a 3A2. One I could claim as a 21.4, but of course that's nonsense. This is a trade from yesterday. I bought it at the psychological level of 120, and now I'm up 70 pips or something. Nice. Okay, 70 pips here, plus this trade here. Of course, the real trade is here. Right, that's the one you're supposed to be in. Once again, exactly on March 31st / April 1st. So we talked about it for months and months and months and months and months and months. Boom, it's gone. You snooze, you lose. Okay? And in the swing trading group, it's more like be ready, willing, and able is what we were talking about right before this. Then in here is like, are you in it? Are you going to do it? Are you doing it? Are you doing it? And then this one is like, dude, if you missed it, right? what are you going to do about it? How do you get it? And don't expect it to come all the way down. Like, don't expect a 382 Fibonacci retracement. Dude, this has got real money in it. This is a new move. It's a new trend. It's not going to give you a 618 Fibonacci retracement because you were slow. We were talking about this during this whole period in the swing trading group. And instead we talked about strategies of like, you got to get in it. You got to get in it. If you missed it here and you missed it here, even though you're ready, willing, and able, now you got to pay that penalty. Now you got to actually enter uncomfortable trades, but you got to get in it. If you're a professional trader, people pay you to do it. So are you doing it? You got to do it. You got to get in it. You got to get it. Go, boy, go. This is what we're talking about in the swing trading group. And of course, up she goes. Okay. And here's a great, nice little role reversal. And then a bigger, more news related one there. But like, right? There's an obvious trade there. There's an obvious trade there. This was a difficult one, but you had to kick it off of an out of position 4 hour 21. This is the 1, 2, 3, and this is the one we predicted 2 or 3 months in advance. So one of the questions we ask on the way down is, how do you know when? Are you ready, willing, and able? Can you visualize the thing you're looking for, whatever that thing is? Your reversal pattern, double bottom, 1, 2, 3, inverse head and shoulders pattern, rollover of a 21.55 on a 4 hour, 1 hour, 15-minute. And I even ask people, print it out, draw it on a chart, print it out. What is it that you're looking for? Have 2 or 3 things. I said, actually put it on the wall and say, if I see this 1, 2, 3, I will trade it because I'm ready, I'm willing, I'm able. The time is right, the price is right. I'm ready to pull the trigger, right? Engage, fire for effect. And then, did you shoot? Are you going to? Why not? Are you ready? Are you going to? Are you still ready, willing, and able? Are you going to? Are you going to? Are you going to? Are you on it? Are you on it? How are you? Right? And this one is like, dude, why not? Why not? Why didn't you? If you had 2 or 3 weeks ready, and willing and ableness, then why didn't you? And then what are you going to do now to get in? This was like sort of an ass-kicking meeting that particular time in the swing trading group. Like, if you're not in it, oh my God, what were you looking for? Did you write it down? Did you plan it? Did you visualize it? I actually sometimes ask people to meditate on it, like literally close your eyes, right? Did you print out your chart? Did you actually draw it on your chart like I asked you? And of course, if you didn't take it, very often the answer to that is, I didn't. I didn't do it. I listened to you. I understood. It made total sense. And then I didn't do anything. I didn't change my behavior. The interesting thing is those that are actually coachable, that actually change their behavior because I say do it, and they're like, well, I don't know why, or it feels uncomfortable, maybe even seems stupid, but he told me to do it, so I did it. Those are the ones that usually end up improving their trading. Right? And maybe many of you people, many of you that are not part of FX Bootcamp, but are just part of the Forex.Today YouTube community, most people come and they listen, they go, yes, that makes sense. What he says makes sense. Yes, that looks easy. That looks obvious. I totally understand. I can see what he's doing. I understand what he's saying. It all totally makes sense. I totally get it. And then I stop streaming and you go back to like La La Land. And then you're like, I don't know what to do here. Right? Right? No, it's so confusing. Wayne makes it look so easy. Well, maybe you're not changing your behavior. Right? Right? If you watch 8 seasons of The Crown, it doesn't make you royalty. Okay? So right? So in this case, you have to learn how to change your behavior. Okay? You got to learn how to change your behavior if you want to change your outcome. So anyways, lots of great little trades here. Cool. How high will it go? I don't know. Okay. I didn't. Can't lose money there. Feels oh so good. Take a look at here. I'm in at 76. We're at 76, 77 and a half, so it's only $1.50, 150 pips. But the thing is, this is acting as support, and it's supposed to act as support. I like that. So I'm hoping to have an active front run here. Okay. 77 is held. So really, to put this together more properly, it's going to be more like this is what we're planning out. Okay. So we need a breach to the upside. This is going to be, there's going to be some, testing here at 78. Okay. So it looks like probably a Sunday afternoon trade. You could try to front run it, but I've seen better setups. I've seen fire and I've seen Wayne. Right? I've seen pound yen trades that never end. Yeah. So anyway, yeah, it's sort of like, nah. So my logic here is if I get this right, I don't want 22 pips. I don't want 44 pips. I don't want 50 pips or 60 or 70. Okay? Right now, my minimal acceptable performance for this trade is take it from 76 to 80. Bare minimum 400 pips or I'll feel like the plan has failed. Now that's a boss. That's a boss, not a boy. Okay. I'm going for not 40, but 400. 40 is good for today. Okay. But I'm not a potato farmer. Okay. Okay. Need to feel redeemed for all those I've sinned against. Cause you all I ever do of a love. All right, let's go to our kitty cat. This is another one like, son of a gun, you son of a. I believe I was short here. And I'm no longer short because of that big news conference yesterday. Ah, oh, you son of a. Boo. 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 Right? Easy come, easy go. Okay. So the interesting thing is CAD's not actually strong. So when I look at this, I think how confident or how happy, let's say, how emotionally happy I am with the rest of my trading portfolio because I'm shorting the dollar. Canada is stronger than the US dollar, but the Canadian dollar is very weak. So I look at this and I'm like, oh my God, my other trades are awesome. Awesome. Right? Right? So I'm good with that. I guess I have to feel happy, I suppose. Take a look at yens. No, Christopher. Nope. Beep deep deep beep 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 beep. Yeah, this one stuck. So remember, this is the technical analysis for this. But you have to put this in context with the yen. Okay. This is what the technical said then. Like let's go through it just one more time. Okay. We're very, very happy with Aussie yen going up in February. And then we knew from March to April, which is, I guess, here. We know in this period from March to April, there's going to be a shift in momentum in the Japanese yen. from extremely weak to not as weak. So we have extremely weak as this goes up, and everything's golden, and now it's sort of like get ready, and then you get this big pullback. That's fine. It's just a nice little entry, so you bought this, and you figure, well, somewhere between the middle of March and the beginning of April, the upward momentum is going to diminish at the very least, right? So you buy it here on the 1st of March. That makes sense because you're a bull and you were a bull before. And then you get here about the middle of March and it dies. Wah, wah, wah. Oh my God, that's what I'm talking about, right? We're talking about this. This is what we're talking about. Somewhere between the middle of April, the middle of March to the beginning of April. And sure enough, okay? So now what we're doing is we're trapping this and saying, look, if you're still generally a bull on Aus yen, because I'm not really saying yen strength. You have to understand that. What I mean is less yen weakness. There's a difference. So you could still be bullish here. What I'm saying here is if it breaks out, not that it will, if it breaks out, the next target is 87, but how do you trade it if you're going to do it that way? Well, if you're going to trade it as a breakout, you got to buy at support, manage your stop fairly close, and hope that it bounces. Okay, there's a lot of hope in that. The next one is let it break and then catch the bull pullback. So you're either buying at support here if you're a bull, or buying at support here, because remember, this is a role reversal. It's resistance now, but if we breach it, resistance becomes support. So you're either long at 82.5 or you're long at 84.5 and on your way to 87. And look, it hasn't done anything, okay? Because we did this, looks like about March 22. So 1 month ago, we said, well, it could break out. It's a lot less likely now to break out, but if it did break out, there's two ways to do it. Buy it here and hope it breaks, or let it break, because hope is not a strategy, and catch the role reversal, which is just a normal breakout strategy. Neither has worked. One hasn't happened, and the other one you're still profitable, but not very, and now you're sitting. Marina says, maybe my expectations are too big, but I see a stronger dollar this whole month. You mean May or April? I guess May, right? Maybe. Yeah. But the bigger sort of question is why, right? Well, I'm isolating dollar here as a reserve currency, so the pound is the pound, right? The pound's got its own issues. So if dollar strengthens in let's say early May, what would be the prime reason? And the prime reason would be the stock market coming down. Okay? And yeah, I could see that happening. But see, I'm looking beyond that. Okay, so Morena, one of the things we did in the swing trading group back in March is we planned out all of April, all of May, and all of June. So in that period, could we have 2 or 3 weeks of dollar strength and let's say a decline in the stock market? Yeah, we could. In fact, I would be shocked if it didn't happen. What we talk about in the group, however, is how to use technical analysis to know when to, right? How do you use technical analysis to know when to take profit? How do you know when to use technical analysis to reduce risk by moving a stop or maybe locking in profit by moving stops? How can you anticipate these things? But also, how do you maintain your conviction for your longer term view? Not for 3 days or 3 weeks, but maybe 3 months to maybe 9 months, right? Like how do you handle these differences in time frames? But I would say a big part of that answer is, well, that's what technical analysis is supposed to be doing for you. It's not necessarily just to enter a trade. It's to tell you, like, okay, there's levels of support, there's levels of resistance, which means there's prices in which buyers will buy, and there are prices in which buyers will take profit. There are prices in which bears will sell, and there are prices in which bears will take profit. So there's actually 4 different types of things going on. Most people barely know 2 of them, right? Most people think if Aussie yen is going up, it's because Aussie is increasing in value, and it might be partially true, but it might be mostly yen weakness, right? So you're like, well, there's a misunderstanding of what's actually happening. So when you start putting these things together, it starts to make more sense. And so some lovely profit taking in early May. Oh, that sounds good. We have to get through earnings seasons, right? Earnings season first. And once we're basically through that, which is coming up, we're probably getting close to that period. Yeah, there might be some time to book some profit. Now, would it be a big one? No, I think we got some more profit taking coming a little bit later. But could it start? Well, once again, in my swing trading group, we've analyzed the seasonality of this, and yeah. So, in fact, I also, right, I have retirement accounts, mutual funds, trading accounts, right? Not just investment, but investment accounts, trading accounts, retirement accounts, mutual fund accounts, college savings accounts. I have a lot of accounts, right? And much of that exposure is to equities. So because I'm diversified in this case, not just Forex, but bonds and commodities and real estate and Forex, cool. I can handle a decline in the stock market, but I'm telling you, if the stock market drops 10, 12, 14%, I'm going to be so happy. Oh my God, let me tell you, I am going to be so happy because it'll give me an opportunity to buy. Okay? And now I would look at that and say, well, that's the conviction that I have for my analysis and research of fiscal policy, monetary policy, macroeconomics, not just for the day, but really for the next 3 to 5 years is what I'm looking at. And so if I can get a seasonal adjustment, right, like for example, sell in May and go away, cool. If that happens, I'm going to buy in May and go away. Okay. So, right now you say still, so that's right. So I'm not sure what you're saying there. Still strong. I look at it this way where the dollar's weak. Look at that. It's lovely. I have a whole portfolio since April 1st of just selling US dollar, right? So, yeah, but could this change in the next couple of weeks? Yeah, sure. I'll buy the dip. Cool. Richard says that's what you should be doing is spreading money through different asset classes. Well, yes and no. Like, I'm not a fan of diversification. For example, if you diversify, you will not become rich. The reason you diversify is to reduce your risk. Well, if you reduce your risk, you reduce your potential for reward, right? Reward is a function of risk. So if you diversify, what happens is like you're a wealth manager. So you go to some fancy firm and some idiot with an MBA sits down and says, well, let's plan your whole life. And the key is long term. The key is, to stay the course. The key is to diversify. And what they're telling you is they want to protect their 1% management fee. They don't give a crap if you make any money because if the market will go up, the market goes down. They have no idea. Trust me, they have no idea. So I'm like, well, I just want to collect my management fee, right? Okay, so if you want to concentrate your investment, yeah, you can concentrate your risk, but if you do a proper analysis and you make a wise decision, your returns are likely to be higher, right? So anyway, so I'm not a big fan of diversification per se. Why do I have all these other accounts? well, if I put aside money, excuse me, if I put aside money for my children to go to college, I don't get taxed. Sweet. If I put money aside for my retirement account, so we maximize everything I possibly can, if I put the money in the retirement account instead of my pocket, it's like free money. It's like free money. It's like free money. I'd be an idiot not to do it. What a moron, right? I'd be throwing away thousands of dollars a month. Thousands and thousands, in which over the course of 20 years, I will turn into millions. How would you like millions of dollars for free? Well, it's not quite free, because when I turn it from thousands of dollars into millions of dollars, I will have to pay taxes when I'm too old to work. Okay, cool. Right on. I'll pay the taxes then. Don't worry about it. Tax me, Biden, tax me. Right? So fine. Great. So, and then when you start doing all of this kind of stuff, it's why the wealthy people don't pay a lot of taxes as a percentage. Okay? So I've told you guys before, but like my wonderful company, which is me, puts money aside for me, right, into a retirement account for me. And because of that, it's, I forget what the numbers, like $4,000. I can't remember. So we max that out. It's more than $3,000 a month, less than $4,000. So let's say 333, right? 3,333. So I take all this money every month and I put it aside. So it's $36,000 a year, but that's money I made. And now I put it into this other account, right? It's like taking it out of this trading account and putting it in that trading account. For me, personally, as a human being, I say, well, it seems like the same money to me. But remember, companies are entities. So it's like the entity over here is put money over aside in this other account for me, because I'm an employee, or I'm associated with this other entity. So the entity is taking good care of me, putting this money aside into an account for me to retire on. I can't spend it. That's enough. I could rent a Lambo, right? I can get my Lambo lease for $3,000 a month. But I'm not allowed to. If I put it over in that other account and I save it until I'm too old to work, then I get it. I can do that for free. They don't tax me on it. I didn't earn the money. So that's $3,000 a month I get for free. I put it in this account. Well, technically, my company puts it in that account. And I'm not allowed to touch the account. I can't spend the account. Oh. But I can buy qualified investments like the stock market or stocks and bonds. And I can trade options, but I can't trade futures. It's really strange. I don't understand these rules, but whatever. Right? So I can do a covered call on a stock position, and I'm like, whoa. But whatever. So for whatever reason, I can invest there. So if I can take all this money month after month after month, and I just put it in there, I'm not being taxed. Cool. It's like free money. You understand? And over the course of, let's say, 20 years, at compounding at 8%, it's millions of dollars for free. Thank you. So is it diversification? No, it's intelligent. Okay. Right? Have you ever thought about going to Harvard for 4 or 5 years and writing it off in your taxes? Whoop, whoop, whoop. Wow, right? You have a graduate degree from Harvard? Well, I have a giant tax write-off, right? So anyways, right? So anyways, this is the idea of money. Is it really smart and wise that I have these other types of investments? Well, maybe, but not for the reasons that I think you're saying, right? I own a house. It goes up in value, and I write some of it off. Cool. Right? Cool. Right? Real estate here is going up at the rate of 10% a year. Cool. 10%. Free money. Free money. Cool. That's the difference between working for your money and owning assets. So there's a difference between being rich, which means you're like a doctor or a lawyer. Okay? Doctors and lawyers work 20 hours a week and they make a lot of money. How'd you like to make the same amount of money? What did I say? 20 hours a week? Sorry, 20 hours a day. They work 20 hours a day. If you're as a doctor, you might be at the hospital at midnight on New Year's Eve, and people are coming in with car accidents from drunk drivers. They're stabbed, they're shot, they're ODing. It's nasty. And then they go home exhausted and emotionally drained. And do you think they say, well, at least I make $300,000 a year? You could work, instead of 20 hours a day, you could probably work 20 hours a week as a Forex trader, make $300,000 a year, and you're like, I feel bad because I don't work enough. No, I have a huge respect for doctors too, but what I'm saying is, let's say that's considered a lot of money, right? That puts them at the top 1% of America. So they make a lot of money, but they work their ass off. Plus, they had to invest into 20 years of education. So they're dead broke, exhausted, but they make a lot of money. They are poor. You can make the same amount of money as a Forex trader, work 90% less, and have all the free time in the world. You know, I watch the sunrise every morning. I can go outside whenever I want. That euro dollar trade I made yesterday, I was in my backyard smoking a cigar and doing research on my phone, and then an alert popped up. Oh my God, euro dollar dropped to 120. No shit. Buy. Right? But what was my work day like? I'm home when honestly, I do this. My children come home from school. They're walking up the front of the front of the property, and I'm standing there and I'm clapping them. I'm like, bravo, I'm so proud of you. And they're like, Dad, that's so crazy. You're so crazy. I know. And I said, you know what? My whole entire life, no one did that for me. So, bravo, I'm proud of you. You're doing a great job. You understand? And a doctor is being puked on and bled on, right? And we might make the same amount of money. And they work 90% more than me. And I can be home to applaud my children, to make breakfast for my children in the morning and applaud them when they come home. Oh, that's so good. Right? Richard's like, we don't need Forex traders nor will. Well, okay, get a Harvard degree, right? Go to Harvard Medical School, please. Now, you might say, oh, I can't really do Harvard Medical School. Then become a Forex trader. To each his own. Everybody's got their path, right? So what I would do is, Richard, make a boatload of money in Forex, working 90% less, and then say, you know what, I feel really bad about this, so I'm going to invest some money in my local hospital. Okay? Or you're going to donate some money to charity, right? Doctors Without Borders, like, that's a good idea, and doctors that are volunteering need that kind of support, and we need, great. Boom, here's $100,000. By the way, it's a tax write-off. Love America. America, I love this country. Except for the 47% capital gains tax. So, peace on earth. May the pips be with you. May your profits be above average. Have a fantastic, wonderful weekend. Think about my messages. Do you visualize? Do you write things down? Are you actively trying to remember? And are you actively trying not to lose money? What are you doing to change your behavior? And remember, making a lot of money and making a lot of money quick are two things that you should not be focused on at all. I want you to think about your future Forex trading firm and how it creates value as a service to your customers. How can you create value? And you will find it has a lot less of you pulling the trigger and watching your MACD and a lot more about gathering research and intelligence and thinking about it and planning about it and putting together strategies that at least reasonably accurately predict the future, and then you're using your technical analysis to accept risk and manage risk. Because without risk, there's no reward, and you're trying to get a reward. So now you're like, how do I mitigate my risk as much as possible, but still put my clientele, in front of potential opportunity? And if you have the right mindset of value creation over long periods of time with as low volatility as possible, you will have a positive impact on society. It'll begin with your society, you, right? Your spouse, your children, your mama and your papa, right? And then it'll branch out. Your friends, your neighbors, your community. It could branch out. You want to become philanthropic, and you're like, I want to donate to this charity. I want to put money into this program. I want to start my own nonprofit. Your profits, your for-profit currency trading firm is going to finance, right? Finance the things you care about, the initiatives you care about. And what you're doing is you're gaining value from creating value, and with your excess value, you reinvest that value everywhere around you. And it's like walking through the streets and flowers are blooming as you go. That could be you. And it sounds funny, and maybe it's a chuckle, but think about it. If you focus now, instead of getting rich, if you focus instead on a value creation proposition, how can I create value? You gain value, and now you have more value, and then you reinvest that value, which creates more value, and it spreads like wildfire, where instead of wildfire, it spreads like wildflowers across a barren field, right? Barren because of a long winter, but now it's spring. And you walk in, and the flowers spread in all directions, and it's beautiful. And you stand there in the warm sun with your palms to the sky, and this is beautiful. And there's butterflies and little bees and a little bunny rabbit, and way off in the distance there's a doe. And you're like, this is beautiful. And then you say, I wish there were a hell of a lot less Canadian geese. They're crapping everywhere in my beautiful field. And that's that. So peace on earth. May the pips be with you. May your profits be above average. Cheers.